Hey everybody, Mike DeSepoli, Heritage Financial Advisory. Welcome to Heritage Insider Weekly for Friday, June 21st, 2024. The last Heritage Insider from the Port Jeff location as we bid farewell to our current office. Looking ahead and very excited to move into the new space. The move has, as you can see, look around me, you see the boxes and pictures and things like that. The move is ongoing and we'll be completing it this weekend. So looking forward to launching the new office on Monday. But nonetheless, we have a job to do. We have markets and an economy to update you on, so let's get right to it. Pretty quiet summer week, not a lot in the way of news. We're outside of the earnings season now at this point, so another 5-6 weeks we'll be back into that. No Fed speak, blackout period from the Fed for most of the week, and then a market holiday on Wednesday for Juneteenth, so a shortened trading week nonetheless. So all we really saw this week was a little bit of continued churn in the markets. Some additional breakouts from some stocks and consolidation in others. But overall, the data continues to remain fairly firm. A little bit of softness in the the JOLTS report, job openings and labor turnover. So let's take a look at the market and see where we're at. Markets continue to hang out near the highs of the year. Looking right, we've talked about the anticipation of or the expectation of a possible correction. So far, nothing to show for it. It doesn't mean we won't get one. Again, not rooting for one. We love straight lines that go up and to the right. But as we know, from time to time, markets either correct via time or they correct via price. So price correction is what we've drawn out here. A time correction would be us moving sideways for a period of time. So seasonality, which we'll get to in a moment, is still in our favor. Last week of June, not great, but still pretty fairly strong. In an election year up until you get into mid-August. So it remains to be seen where the markets will go from here. But so far, markets stubbornly not wanting to correct. I think investors, are okay with that as we see a continued interest and momentum behind the AI trade, right? The next industrial revolution, as we've been calling it for the last 18 months. People are starting to catch on to it. People are starting to come around to it. So I think that that's something that's very exciting to see what the future holds. So markets just hanging out, a little bit of a down day yesterday. Today, pretty flat. Summer Friday type vibes. So what we're looking for is finish up the quarter here. Second quarter is almost in the books. We got to get through June 30th for that. So once you get to the beginning of a new quarter, you have new flows coming into the market from pension and endowment funds as well as 401ks and the like. So should be continually supportive, but we'll see where we go from there. When we look at seasonality, we're still in a pretty good sweet spot here, really, and through the late August time frame. We are a little bit ahead of schedule this year for market returns compared to the average, right? You can see 2024 is tracking higher than normal at this point in the year, but we know historically that election years tend to be positive, and so we'll continue to watch how this develops. Perhaps maybe this year we get a little bit more than the average if markets continue to move higher like that. What is very interesting is as we have continued to march higher in the markets, investors just remain exceedingly fearful. And this is a contrarian's dream right here to see something like this where you have a market that's pressing against the yearly highs and you have investors that are very fearful. And essentially this would suggest taking money off the table, right? So again, market tops are a process and they're euphoric when you get to that part of the stage, or that stage of the game, I should say. So nowhere near a top in our view. This, you'll know we're close to a top where we are at the highs and we get a steep pullback and the fear and greed doesn't budge, right? It's an extreme greed because people want to press their bets and buy the dip. So we're not really seeing any of that now. And so unless or until that shows up, we think markets continue to move higher. So really not a lot to talk about this week in the way of economic news. Things pick back up next week. Let's just see what we have. I think we have GDP on the 27th. Okay, so that'll be interesting to see how GDP comes in. That does impact, Fed decisions and whatnot. We also have durable goods orders, which is another, wholesale readout that'll give us an idea how the economy is doing. So we'll come back for that next week. We'll be back to update you on it from our new space at 180 East Main Street, Suite 301, Smithtown, New York, 11787. So if you need us, reach out to us. We are available. We're not going to, communication-wise, we'll be up at this location until the new location is set up and online, and then we'll bring the old one offline. So reach out to us with any questions. Have a great day and a great weekend. We'll see you back next week for Heritage Insider Weekly.